TradeprofessionalInvestor.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome back to the Frivolity. I suppose try and get my microphone as close to my mouth. I would do this, but it just doesn't work very well, right? Because then it looks like I'm good. I'm speaking. Just gonna peek over the. I'm not good at this social media stuff. I mean, look at all the followers we have, right? In fact, Chris and I were joking about it. Brian is just horrifically politically incorrect. But anyway, try our best. What the hell? See what we can do. Welcome to the Frivolity. It's a few minutes past the top of the hour. Sorry for starting late there. Had to try and explain how it looks like Alan has hijacked my computer, which is a little bit freaky. But anyway, I suppose in the after party we can talk about that crazy adventure. Today is Tuesday, 15th of August. So we're basically halfway between, halfway through the month. We have big options expiry coming up here on Friday, the monthly options expiry. And then, of course, I did hear somebody talking about the quarterly options expiry coming up in September. But monthly options expiry, pretty important. And especially in this kind of screwy market right now with worries about the Fed and stuff like that. There's still probably a fair number of people that are in this August contract. Interestingly enough, pulling up the dashboard, interesting to see. Country funds have now officially gone stupidly oversold on both the short and medium term. So I actually think we're very, very close to some sort of pivot in the marketplace. You've heard me talk recently about Larry Williams has been sort of calling for some sort of mid-August pivot back to the upside. And I think there was one other gentleman that we were talking about recently who was also looking for, guys that, smart money and all that crap, right? So I think we're closer to some sort of pivot back to the upside than the bottom, believe it or not. We'll see how it goes. Only time will tell. But the international markets are getting completely washed out now. And usually when the whole market, especially the currencies, when we see, because keep in mind, these currencies, to all intents and purposes, are basically risk-on proxies. If you want to take money out of the market, you repatriate it back to the US dollar index, maybe throw it in USD bills. When you want to go and invest around the world, you go and buy these international fiat currencies that are pegged to the US dollar to a certain degree. And you go and play in the market. So interesting that the currencies are all basically getting washed out as well. So you can definitely feel we're coming into some sort of pivot here. See a couple people over there asking questions. Keep in mind, this public show should just be just a simple overview, maybe some general observations, best practices, that kind of stuff. Julian and I have very different approaches, but to all intents and purposes, just a general overview. And you are correct. Sjord is on the call here today for the after party. I don't know. I mean, we could always ask him, but I don't know whether Sjord's ready for prime time to do one of these sort of half-hour market overview kind of presentations for you in the public. Maybe we'll ask him in the after party, and if he feels like he's up for it, maybe next Tuesday we'll let him do a public show. I don't know. And actually, Chris says here that Sjord did cover one time when I was on vacation. So I suppose, oh yeah, look at that. Fuzzy said he did great on the last one. So there you go. Sounds to me like, Sjord, you're being promoted. And I don't even think he's aware of it. What are you talking about? Yeah. So anyway, why don't we, in the after party today, Tuesday, is CTO day at TRI, where Sjord, our CTO, Chief Technology Officer, who is going to be talking in the after party. So if you are interested, just pop on over to the site and participate in the after party. All right, so moving right along here. Also, too, you could make the argument the breadth is getting washed out in the States, although it's not really oversold. I mean, we're not even above the or below the 20 line on the fast moving average. Might be like a situation that we saw here earlier in the summer where the market begrudgingly rolls over but not from like an egregiously overbought condition. We might just, bottom out, W out, moving average cross back bullish. We get bullish again, and it never even gets egregiously oversold down in the States. I've told you guys repeatedly, I don't think you're going to see a recession out of the United States, and I don't think we're going to see like stock market crashes there. And the irony of it all is that I hate to say it because everybody's going to be like, well, you do it too. But really simply put, if you see social media doing things like going, Bitcoin, man, we're going straight up, like you can almost guarantee that that's not going to happen. In fact, you might make the argument the reason why Bitcoin could go to 20,000 in the 17, 18 cycle, and then, 50, 60,000 in the last cycle is because when people would say, well, do you think Bitcoin can go to new highs? People would be like, well, I don't know. I don't know what's going to happen. I don't know. But recently, every time Bitcoin catches a bit of a bid, all of the social media guys all just come piling out going, this is it, this is it. If you don't buy now, you're going to regret it. And oh, this is life-changing events. And then what happens? The fucking market falls apart. So I don't know. If anything, all this social media stuff, it's probably not good to see higher prices. And interestingly enough, where are we seeing really dramatic price moves? We're seeing it in odd altcoins that are popping, but nobody's talking about them in social media. And that's a perfect analogy. If anything, if you're long a name, you should be sitting at home going, don't mention it, you social media people and you hypers and shit. Don't even talk about my coin. I don't even want you looking at it. Because as soon as you start getting interested, the rally's over. Anyway. Okay, so demonstrator of best practices. Try and do this every single show for you so you guys get an idea of what's probably a good thing to do on a regular basis if you want to be one of these day trader kind of guys. Today's Tuesday. Like to check in with how the computers are doing. Well, don't do that, Coke, right? You're jinxing yourself. Anyway, how the computers are doing. Feeling pretty good. Don't hear any clunks or clanks, and everything seems to be humming. I will say, though, I should probably put a note. In the after party, I'm going to tell you a funny story about it. It looks like Alan has hijacked my computer, which is a bit weird, but oh well, it's probably just some little bug that he's sent out into the world. Personal health, diet, exercise, okay. My shoulder's still giving me problems, but anyway, it is what it is. And actually, I forced myself literally. It's like Mondays is the only day when I don't really have any major commitments, either site wise or social media wise or Liam wise or something. So I actually just went to bed at like 4 o'clock yesterday afternoon and just forced myself to sleep for 12 hours straight. And that's probably why I still look relatively young. I like my sleeps. So as you can see, there's my note about sort of how I'm feeling to start my day. Looking at the data, really interesting cross messages here coming out of the world. US data and like things like retail sales for North America is still pretty strong. And unfortunately, this is a really good analogy. Maybe take a screenshot of this, throw it in your journals kind of idea. They usually say what's good for Wall Street is not so good for Main Street. And then conversely, what's good for Main Street is usually not so good for Wall Street. So here is a really good example where not bad retail sales number, right? If you worked on Main Street, this is music to your ears. Consumers are buying, they're spending money. And, like I said, if you are in a retail sales operation, you are selling product, you got to be feeling pretty good. Main Street's happy. So what does Wall Street do in the face of that? Of course, it face plants. We're down a better part of 1% here on the ES this morning. Dow's off good 300 points. As you can see, just as we speak right now, before I got this going, you can see I've got a short trade working on the crude right now, trend continuation kind of trades. Wondering whether we can really go more than about 2.5% to the downside, but the setup came in following the euro close, and I've had moves stop to scratch level hit, so my stop's sitting at scratch. So yeah, I'll just live with the results. If this thing pops back up, I'm gone. If anything, you might even argue that if this thing W's out, I might even want to think about going long. But I might let this thing get stopped out and then hunt a pullback against these lows, maybe a Wyckoff check, something like that. But anyway, we'll cross that bridge when we come to it. Right now, I'm short and I'm looking for these lows to get taken out. If they do, you can see my downside objectives. This is the bot. This is my bot trade setup that I'd love to trade when I was a prop trader. 2.618 down against this trend line support. And there's also a key horizontal support and resistance line going way back at this level as well. So it wouldn't surprise me if there's some big capitulation dump here. And the interesting thing about crude is I'm not really bullish. If you actually look at this chart, this bull market's over, right? We had talked months ago about this bullish ABCD and how price ought to work its way up into the low 80s. And I remember when this came in, we are all like, yay, low crude oil prices, low gasoline prices, low inflationary pressures, blah, blah, blah. And then the W came in and it was like, ah, crap. So sure enough, I don't know whether you've seen at the gas station, things have been being bid up. But it does look like we're coming off, and there's that horizontal support and resistance line that I showed you there a second ago on the 3-minute chart. Wicks and tails like to be eaten. Candle body lows for trade location. There is actually the up channel trend line. So a stab against these lows. You can see 30 SMA here off of this daily chart. That would make sense. The only question is, do they continue the market lower here with it already down 2% on the day? Usually markets don't like to go down more than about 2.5% on the day. We're off $2 here, you can see. And we'll see what happens. Only time will tell. So, I don't know whether you caught that, Chris, but that would be a really good Google short, right? Because it was just about 1 minute. What are you saying? Mic issues? Can you hear me? Chris, can you confirm that my mic's operating okay? Okay, good. Can you make a little note, like especially tomorrow, if we get together, because Wednesdays we don't usually do an after party, we work on the shorts and stuff. Can you make a note in our document when I did that retail sales sort of rant there? It was about 1 minute long. And it was a really good example of, when what's good for Wall Street is bad for Main Street, what's bad for Main Street is good for Wall Street, right? Make sense? Okay, hopefully that makes sense. Okay, good. So the interesting thing here, though, is we've got a couple cross currents. I think the US economic engine is actually operating on all cylinders. There is a country in the world that for some reason they decided they had become a global superpower, that it's actually an absolute train wreck there now. You all know what I'm talking about. So if we actually go and look at the data from overnight, actually, I don't know whether I have this because this just might be today's. Yeah, so where are we here? Let's pop back on over here. Here is Monday's data. Remember yesterday, I had said that the real data that we want to keep an eye on, especially with regard to things like bullish setups in Chinese stocks, is we got a bunch of Chinese prints coming out overnight. And of course, half the problem here is because it's a totalitarian dictatorship and it's run by a fucking megalomaniac dictator. You don't even know whether this data is even correct or not. My hunch is these numbers have all been inflated to the upside and they're still coming in. I mean, look at retail sales. This is like literally a story of two ships traveling in opposite directions economically. You've got the Americans, their retail sales came in twice expectations. Chinese retail sales, and everybody's wondering, is the Chinese economy going to transition from an export-only society and actually create an internally based, consumer-based society? Because that's the only way these modern economies work. And the answer clearly is a big fat no. I mean, retail sales came in almost half of what they were expected, and that's assuming that this is actually the truth. I would say it's probably in your best interest to knock like a full percent off that number. And of course, if you go on YouTube and you look at all the videos and shit coming out of China right now, it's an absolute disaster there. So anyway, the point here is, of late, we've been talking a little bit about you want to follow sort of global economic trends. Well, let's keep a real close eye on how China's acting here and whether these bullish bot setups are actually going to fire here or not. So if we actually look at the Hong Kong actual index, the Hang Seng, you can see we're right up against a critical trend line here. We haven't broken it, and unfortunately the break of the trend line itself is not a trade. What I think's happened here is you can see it goes sort of like A, B, C, D. So we're pushing our way down into sort of PRZs to the downside here, but you can see obviously the data was not well received in China when it was released. And then when, you know, the North Americans, all these China funds and stuff are listed on the US stock exchanges and stuff. So how did North American investors and really European investors and stuff react to that Chinese data? First and foremost, you know, I actually put out a really, really good video. Bookmark this. I mean, I'm here to try and help everybody learn how to become better trader. I mean, honestly, that really is my number one motivation. Here we did, Chris did up a really good sort of clips video. We did a really nice tutorial on volume impetus yesterday in the Daily Brief after party. Chris put together a really nice video, and this is such a great way to use volume to confirm price action. And of course, you know, huge bullish, that really, really good. Just go and bookmark that. Fantastic. In fact, I think I might even make this required watching for the level 1 program when we do the volume analysis week. It was so good. But the point here is, can you see that this is the exact opposite situation going on in China? Clearly, somebody came out and said, sell that fucking thing. Sell it now, sell it hard, keep selling, and then sell some more. 2.5 million shares at, you know, let's say an average of about $79 a share. I mean, we're starting to talk some serious money. That's like what's that? That's probably like maybe a couple $100 million worth of this thing that they dumped right there. And sure enough, you can see it's just cascading its way lower. And to add insult to injury, this 3-bar pattern, bang, 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 that's an empire. And it's a bearish one. It's also a 3-bar fractal fail. So, you know, our level 1 program, you learned about fractals. There's a really good example of a bearish fractal that's firing with a gap too. Ugh. Momentum clearly to the downside. I don't know, man. That doesn't look good out of China. So the interesting thing at the same time, though, is that actually the data coming out of Japan is insanely strong right now. So flip the equation and look at the Japanese data. GDP growth rate quarter over quarter, 1.5%, basically 50% better than what the market was looking for. And on the consensus, almost double consensus. And look at this GDP annualized preliminary growth rate, 6%. When was the last time you saw a 6% annual GDP growth out of any Western nation? And of course, Japan here has been, you know, mired in this sort of, you know, lost decades, 20 years of nothing happening over there. And, you know, the Bank of Japan's even been kind of like, you know, maybe we should stop having our interest rates at 0 and actually start increasing them. Yeah, Japan, I think that's the message you can get off negative interest rates now. So, you know, again, an anecdote of these are like two ships heading in exact opposite directions in the open ocean. But I've said this all along. I mean, China, this is yesterday's story. Nobody should be interested in China. That's just a train wreck. And I do find it fascinating that Japan, and I'm actually starting to hear a lot of sort of anecdotal talk out there in the world that Japan is starting to come back. Everybody keep your eyes on Japan. And of course, you know how I've been bullish of things like Toyota Motor Company, a big Japanese auto manufacturer, and its stock has gone booming higher recently. So that's further anecdote that stay the fuck away from Winnie the Pooh land. He's an idiot. And you know, if you do want Asian exposure, I would strongly suggest you take a real good look at Japanese equities. North American data coming out today. Of course, substitute drama teachers have completely screwed us, and inflation is actually ticking up in my country. Thank you, substitute drama teachers. You're awesome. Month over month data also ticking higher. There's no way that the Bank of Canada can lower interest rates in the face of that. And I might even argue that that might even give them ammunition to continue raising interest rates. My hunch, though, is the rule was, and Mr. Druckenmiller told us this a couple of years ago, spot on, and I've heard it over my career. And now you all will know this for the rest of your lives, that the only way you can get in front of inflation is you have to make sure that your short-term interest rates that the central banks are charging are higher than the inflation rate. So we are in that scenario now. I think, you know, short rates are around 5% or so. So they are higher than these numbers, but this month over month increase, basically 50%, and really, according to the consensus, double what consensus was, that's not a good sign. And the problem here is that substitute drama teachers think that they're dictators and that he can do any old damn thing he wants. And it's so funny. We've got a collapsing housing market now in Canada. The data is coming out showing that things like construction worker spending is just falling right off a cliff. And the guy's saying, well, just bring more immigrants in and we'll give them construction jobs. Excuse me, sir. The construction industry is contracting. So you're going to bring a whole bunch of people that have no jobs and no skills into the country to work in the construction industry that's contracting right now, which means that there's going to be a whole bunch of new unemployed people from that sector. And all these people that are going to be coming into the country are going to be adding to those unemployment roles. Is this really smart? Have you really got a half decent head on your shoulders? You know the answer to that. All right, thank you, sir. And then, you know, as I had sort of said, coming full circle, Econs coming out of the States, there's no way in hell the Fed's going to lower interest rates in the face of this. You know, retail sales ex auto up 1% on the month. Holy crap. That's like 10% annualized growth rate. You can't do that on a consistent basis. So, I mean, this might be just an anomaly here for this month. Let's hope that's the case. But Mr. Druckenmiller, when he got really upset at the US Fed and all the bankster cartel idiots, his basic comment was how retail sales got absolutely out of control down in the States. And he was like, what are you doing? You're destroying our country. And he was right. Anyway, import prices, twice expectations, so still pretty hot here. Export prices, hugely above expectations. And I think actually this is all about the high price of energy right now and the high price of grains. So anyway, point here is data is still very strong here from an inflationary perspective and nationally. But at the same time, too, look at what's happening to sort of the industrial base. This was supposed to actually come in as a positive number, +4. This is sort of the New York State area manufacturing, and it came in a huge miss. Like the market was actually looking for a relatively strong number, and it came in a huge miss. So unfortunately, that is a mixed message. So we got a whole bunch of cross currents going on with the data here today. Very, very mixed messages. So as a result, when you go look at the market, kind of like what we were saying earlier, of course, you know, China now is in major question. It's interesting following, you know, Allen. And of course, Allen here, and the scuttlebutt is that Allen has basically hitched his trailer to China. So that might explain a lot of why Allen is so weak of late. You can see Toyota's actually gone and double top two here. So I think that the rising interest rate market, and I don't know whether I did it in the public show, but in the after party show, of course, we had a great conversation about interest rates down in the States still pressing higher, and the inflation pressure is still pressing higher as well. And I think this is actually taking a toll on the auto industry and anything that's sort of like, people don't just go buy cars with cash, everything's done on credit. So if the interest rates are still moving higher and the consumer is feeling pinched, then maybe that's a big reason why the auto manufacturers are under pressure. The bigger ones, interesting, like Allen's got a weekly key reversal working. So I'd be very bearish of this anyway. The only question here, and this is a time tested adage, is do you really want to short a Barnum and Bailey kind of guy? It's dangerous shorting those kind of characters because he can come out on social media and talk about how he wants to have a fist fight with Zuckerberg or whatever. And all of his minions are completely distracted by something else. Do you short that Toyota double top? Well, I mean, it is a double top, and I know lots of guys who made great money over the years doing that. And 50% rules, you can see this thing's probably got to come down, fill in all these gaps. And the irony of it all is I missed this trade back a month or two ago. I still have my stink bids working down below. So if we do get that dump down into these lows through this fall, I'll be more than happy to go and buy Toyota. The real one that I think is the disaster here is General Motors. And if you're going to short, you might as well short the shit. And look how this thing is just collapsing. And of course, just made another new low. So what a big surprise. This thing's a piece of crap. And probably has to come down, fill in these gaps, and we'll see how it acts against all these lows. So that was clearly the winner short trade. And as you can see from our spread trade, this actually turned out to be like about a 7 or 8 to 1 risk reward, just a monster win there. Anyway, it is what it is. I guess that also too, another funny cross current is this crazy NVIDIA. And technically you can say that NVIDIA has officially carved out an upside key reversal with yesterday's price action. So, I mean, I didn't take this short here off this M top. I wouldn't fault anybody who did. I would definitely say this upside reversal probably caught a lot of people off guard. And if anything, I think this is a polite message that maybe the best thing to do is just hop off on the sidelines. Not really the biggest fan of just taking one reason for a trade. And of course, I think this is an absolutely horrible trade location. I don't really want to buy that. But if you were like, well, Brian, I've seen how these key reversals work and this is the shit. The interesting thing about this stock is it actually gapped higher this morning. There was just so much inertia on this thing. Then we dipped down and it actually traded to the key reversal buy level. So you can't even make an excuse that you weren't able to get in on this trade. It actually did fire. So I'd be curious to see how this plays out. I would definitely say that the shorters, they're on the run right now. And anybody who is short NVIDIA, don't be shocked if this key reversal, something clearly moved here. And I would say, like, literally it's a coin toss which direction we actually go here. I wouldn't even touch this. I will keep watching it. It'll be interesting to see how the key reversal plays out. Now, if you are bearish and you're thinking, well, this just dead cat bounce, well, maybe let's just wait for the trend line to be tested and let's get some sort of bearish market structure. And then if something like that happens, then we can think back to the downside. The interesting thing of late is that we've actually been trading these things just using 1.5 risk reward as sort of your minimum profit objective. So fascinating how 1.5 to 1 is nothing more than just a sweep of these old highs, and then maybe it M's out and rolls over. Considering this is the summer, it is a little bit low liquidity. The only reason why this thing rallied was Morgan Stanley came out yesterday and upgraded the stock and said that they figured at this level, this was a pretty good place to step in on the long side. I mean, I can't fault them. I thought we were going to get a rally back up to this high, which we've done. And actually, I'm not really impressed with anything above this. And what's fascinating is that this is just a doji, which actually means indecision. Why is that the case? Well, you can see that we could draw things like reload zones, so that should be pretty obvious. If I wanted to short this thing, believe it or not, actually, this is the location that you actually step in. These gap fills 91.4% of the time we should fill them in. So I wouldn't fault anybody if they wanted to step in and hit this thing here, or at least say, look I'm not going to panic sell against the lows, but I would like to take some profits. They rallied it back into the original fail level, so I'm going to hop off here. So let's see how this develops. If we do get a new market structure top come in here, then I don't have a problem with actually joining this short trade again. And if anything, Tuesday is our secret options formula club meeting. I would normally be very interested in joining let's say like a bear put trade here on this. The only problem is that the damn stock is so expensive that the spreads are just ridiculously expensive, and I don't like to spend a lot of money in the market. You know me. Okay, what time is it? That's about a half an hour. We take a quick boo at the corn. I don't really think there's anything startling happening here today. Whoops, big fat M's coming in now. M in Ethereum, sloppy M's in Litecoin. I did notice, and maybe somebody in the comments can post about this. I'm noticing this dominance thing just going absolutely haywire. Like when I first woke up this morning, these numbers, the total crypto index and this dominance, they just showed like insane spikes going different directions. And is it one or two particular names that are causing this to happen? It looks like everything's sort of settled back down and we're not getting those crazy ass spikes. But at the same time, too, new M's. Can
Yeah,
you
we
hear
lost Brian.
me? Hello. That was weird how I got summarily kicked out there, eh? Let's see, am I screen sharing that? So this is what just came up on my screen. And actually Zoom has been crashing a lot lately. Anyway, I'm not quite sure what the hell happened there. That's probably a polite message to Brian. You're talking too much. Anyway, I just wanted to finish off this free video. I think I'm still connected, but I have no idea. Just quick look at Bitcoin. As I had said there to begin the call, every time I see these rallies, I go on social media and you see the fucking kids going crazy. This is it. You better buy now or you're going to regret it. We're going to the moon. No stopping. And that's basically your cue that, well, that's the end of that rally. If anything, oh, geez, I keep giving you guys these free shots. This is such an incredible image here. What's our rule about trend lines? And I mean, I guess I'll, for the purposes to wind this video up. Our rule is you cannot take a trade on this trend line break until you see a W on the other side of the trend line. And do you see how if you followed that rule, you would have kept yourself out of a lot of trouble? And it's incredible how this stuff works. So please learn from this. And why is it that YouTube is not letting us show the world this information that would make that positive difference that Spirit has been asking me to do for 10 fucking years here now? I mean, it's right there. Don't take a trend line break trade unless you see market structure on the other side of the trend line. So that's what's going on here, folks. Yeah, they broke the trend line. That's this our DFF smile. We all know what DFF stands for, right? And that short trade actually is still working. There's nothing that's changed here. And if we can somehow get a W on the other side of this trend line, well, then maybe we can start thinking about bullish bots and all that kind of fun stuff to the upside. All right, I think I'm going to leave the free broadcast at that. Of course, Sjord's going to have lots of fun talking to you about his killer altcoin picks. Woohoo! Sjord's, I tell you, combine Sjord's brilliance with computers and crypto and technology with the Beamish's 30 plus years trading experience to help you with timing your trades and appropriate locations and building trading plans and risk management. And I'll tell you, there's a ton of money to be made out there, folks. So we're going to head on over to the after party. I see somebody asked me to look at, can you please look at my love Libra? Let's do that in the after party, Coke. These Monday to Friday free shows are not supposed to be taking requests. The whole point is we want you to join the site and come and join the after party. And we'll be more than happy to take a look at it there. Okay. Have yourselves a great day, everybody. PMA for the win. By all means, if you want to learn how to do all this stuff, new school terms starting here shortly. Sjord was going to give me the link or somebody in the marketing department to show you the right page that I should be showing you. So, Sjord, do you have that handy by any chance? I know you got your microphone on. Anyway, I'll try and show you again tomorrow that page. We're working on it. But the point here is new school term starts after Labor Day. You want to come in, get yourself ready. Remember what 23 is. Who can tell me? Ben or year, are we supposed to be buying or liquidating our speculative assets? You all know the answer to that. So when you look at something like this, and of course, Sjord's going to give us a great conversation. What the hell's going on? You should look at this and go, well, 23, this is exactly when this is supposed to be happening. And if you don't know that, and you don't understand that, then get your butt into the education program. Let's school you up so you can now be part of the institutional class and you can make money in the market like a boss, like all these one percenters. And you stop making the public mistakes that the public always makes, chasing up markets and then panic selling into down markets. Okay, shill's done. Have yourselves a great day. PMA for the win. All the best. Hugs and kisses. Love you all dearly. Let's throw lots of comments and say hit the like button and subscribe. I see we got 17 likes. Can we at least, we got 20, 30 people watching this. Can we get 20, 30 likes for this video today? I'd love you for it. All the best. And the only thing left for Brian to say is bye for now.